We detected an unusual trade worth $5.6 million on Micron stock, ticker symbol MU. But here's what makes it more interesting. Micron reports earnings next week on March 20th. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying ahead of earnings or bearish and selling before the earnings report is released. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, such as earnings reports, to make better financial decisions. This is why smart money always seems to be ahead of the game. No wonder the rich keep getting richer. And so, to level the playing field, let's dive into our analysis to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, the most unusual trade happened on March 10th at 1:07 at the 4-second mark for these May 16th options at the 110 strike calls and the 125 strike calls. 11,164 contracts were being traded for a price of $265 and $100 each. And so we can calculate the total cost of this trade, the price of $265 subtracted by $100. Keep in mind that options are priced per share, so we need to multiply by 100 since each options contract represents 100 shares of stock. And so each trade cost $165. Now, we need to multiply this by the total quantity of contracts being traded to get the total cost. But notice how there are more contracts being traded, not just the 11,164 contracts. And so, how many total contracts were being traded? Well, let's find out by diving deeper into the data on the option chain for these May 16 options. We can see here for the 110 strike calls and the 125 strike calls, we have a volume of about 34,000 contracts being traded. And so to calculate the total cost of this trade, we have about 34,000 contracts multiplied by the cost of each trade, $165, as we calculated earlier, is $5.6 million. But keep in mind, the earnings report is being released next week, so this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to the lower risk and higher probability of profit trades, then go to our website. We'll put a link to our website up here where you can get deep insights into exactly when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this is higher risk, we still traded this, but we used position sizing to manage our risk. Since this was a new opening trade, we also traded these call options and got into the same position here. POS stands for our position, and the green color means a buy position, and the red color means a sell position. Now, how did we know these were new opening trades? Well, notice that these options have an open interest of 3,356 contracts and 3,351 contracts, both of which are much less than the 34,000 contracts being traded. It would not be possible to close out that many contracts if there were only 3,000 open contracts. And so we can conclude that this wealthy investor was opening new contracts and not closing out contracts. This data is very important to figure out because if a wealthy investor is closing out contracts or trades, it could mean they're worried about that stock. So maybe it's not the right time for us to jump in. On the flip side, if a wealthy investor is opening contracts, it could signal an opportunity for us to start a new trade. And so we always take this extra step to analyze the data at a deeper level because many other websites and scanners don't. They report all high volume unusual trades without filtering out closing trades, which leads to wrong results and losses for those following unusual option activity. And that is why we have more winning trades than other websites. Now, with that being said, not every trade will be a winner, but as long as we diversify our portfolio with high quality stock picks backed by strong data analysis and use option strategies that can gain more than what we could lose, then we can stay consistently profitable over the long run. And so, if you want more trades to diversify your portfolio, go to our website. We'll put a link up here where you can get access to more opportunities and strategies to increase your profit potential. Now, back to this trade, let's break down the data even further. Based on our deep research and analysis of multiple variables and data sets, this wealthy investor bought these 110 strike calls and sold these 125 strike calls as a vertical call spread for 165 each, the same price as we calculated and saw earlier on the options time and sales tape. And so when we analyze this trade, you can see here on the risk profile profit loss graph where the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, this trade becomes more negative loss. And if it trades above it, this trade becomes more positive profitable because this is a long bullish trade. And we can confirm it here on the Greeks. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta. But be aware of the risk of this trade. We have a negative theta decay, which means that as time goes on, this trade will lose in value. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as time goes on. And so you can see here, even though these call options have a strike price of $110, the stock needs to trade above $111.67 per share for this trade to be profitable at expiration. Because of this risk, including earnings, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more trading strategies to boost your profits and gain an extra edge beyond just picking the best stocks to beat the market. Let us know in the comments below. Do you think Micron stock will rally after earnings, or do you think it will crash down? As usual, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.